Good morning, traders and investors. Roger Scott here. Tuesday, August 29th, and it's about 7:51 in the morning. The market's going to gear up to open up in about an hour and 39 minutes. That's my quick calculation in the morning this early. Now, before we get into everything, I'll talk about strongest sector, strongest stock. I'll give you a good overview. I need you to do a few things. Make sure to subscribe to our YouTube channel. We just rebranded it as the Roger Scott channel. Same channel, just rebranded it. Like the channel, subscribe to the channel. And most importantly, subscribe to my Telegram. I give free trades, free market analysis. Yesterday, I gave levels on the S&P 500 and the Dow and the Nasdaq at no cost. Subscribe to it. Go to rogerscott.com/Telegram. Lastly, watch my VIP room live at noon today. It's happening at noon, right before my 1 o'clock webinar. Don't miss out. You could find the link above or below this video. I've opened it up for the summer for free. Yay, no cost. Lastly, if you have any questions, post it below this video or send me an email, roger@rogerscott.com. Real simple, right? All right, now let's get into all of this. What are we wasting our time for? So, as you can see here, the Nasdaq is down about 20 points. The Dow's down about 35. The S&P's meeting us in between. This is very random. This is not meaningful trading action. We've got a lot of data today. We didn't really have any meaningful earnings today, but today we've got, you name it, we've got it. Not big cap stocks, some big cap stocks, but mostly smaller stocks, second-rate stocks, but a lot of retail stocks. The problem is retail is the biggest sector of the economy, which means it has a big impact. So you've got Big Lots, Best Buy. And when we're looking at retail earnings, we're looking at a theme. We're not really looking at how the individual store is doing. We're looking at how the whole sector is doing. So it has a lot more meaning. Even if it's a small store, it could have a bigger meaning for another store. For example, if Best Buy comes out with bad numbers, it could be bad for the chip sector or Apple or IBM. Or NVIDIA, which is a much bigger stock. So not that these are big earnings, but they could trigger an event outside of these stocks. That's what I'm trying to really say. Whereas other sectors like energy, they're more reserved to their own space, but certain sectors like retail can really reverberate throughout the market. I hope you guys understand where I'm going with this. Tomorrow you've got Salesforce. That's another one. And again, Salesforce, is it a tech company or is it a consumer discretionary or is it a retail company? Because if retailers don't do well, nobody buys Salesforce, right? Salesforce doesn't do well when economy doesn't do well because there's less retailers. Less selling, less need for Salesforce, less need for marketing. So again, it's all very interconnected. So you got to keep an eye on this. So even though these earnings are not huge, they are very meaningful. As far as data, Fed data, you've got consumer confidence today and job openings. That's coming out in just a couple hours. Keep in mind, both of these reports come out half hour after the opening bell, which means the market can change its tune half hour after the opening bell, which means I don't recommend you trade at the open. Now, I typically don't recommend you trade at the open, but today even more so because you have Fed data. It's always good to wait the first half hour, 45 minutes to get a good understanding of where the market's going. Also, we may have some suppressed activity in the market because tomorrow you have the GDP report. This is a very, very, very big report that the Fed uses to decide whether inflation is moving faster or slower or if it's right in line. So that's going to be a very meaningful report. You also have ADP, which has been completely misfiring the employment situation. I mean, like, it can't get any worse. So I'm putting very little credibility into the ADP report, but I'm putting a huge credibility in GDP. And also we have international trades in goods and services, which right now is very meaningful in light of the drama we're seeing with China. And with the energy markets. So bond market's going to be very meaningful the next couple of days. Now, I called this as a pivot top. I think the market's going to come down. Now, one of the things about technical analysis, it's very hard to gauge technical analysis when you have this type of data coming in. This is big data that can really change things around. Technically, right now, as we sit, I don't see the bond market going much higher unless there's some really, really positive data. I think the bond market's going to come right back down to this line to 94.11 and break down all the way to 92. So I think there's some downside. And theoretically speaking, it's not an incorrect trade because we are, in fact, going with the main trend. The trend is clearly down. So we're not really doing anything crazy here. But I know a lot of traders don't like to sell near bottoms. but I do believe there's more downside here because I don't think interest rate sentiment is moving in our favor. I think it's moving outside of our favor right now, as a matter of fact. Now, small caps. Small caps look like they huffed and puffed last few days, but this doesn't bring us anywhere near this level, and I think this is going to revert back down. I think small caps are due to come back down. If you look at the longer-term chart, we key off of these levels, and we typically come down here. There's really nothing stopping us from doing that right now. The SPY, same thing. Now, we're above this crucial level. Now, if we break higher, here's what I'm going to say. Let me just make this bigger. If we break higher, I like the fact that we're above this level right now. We closed above this level yesterday. If we keep trading above this level and we break the 450 on the SPY, that's very positive. There's a good sign we can go up again. The problem is we have this sentiment, and on momentum levels, when you're talking about momentum levels, let me just show you what we're looking at right now. You see where we're at right now? And look at it historically. Typically, when it comes up here, it goes down here. Now, we could bottom out here, but I'm not sure. I think there could be a little bit more. One thing I will tell you for sure, liquidity towards the lows is very strong here, and liquidity towards the highs is strong. So even if we're turning around, you're still going to have some bearish sentiment. And in light of all this Fed data, I would be very, very careful. I still like the energy sector. I like how it's breaking above this level, or it appears to be breaking above this level. We'll see today if it comes right back down or breaks above. But I do think energy has some upside because we're above this resistance level, and there's some good upside potential here. Now, I already mentioned Fed data. Let's talk a little bit about global economy, and then I'll get into top sector, top stock, and all the nitty-gritty. And I've got three stocks, runaway penny stocks, that are perfect day trading candidates, but you got to follow my rules. Yesterday, I gave rules for HE, and I said to short it if it goes below 12 something, and people didn't listen to me. I'm very specific about, you got to follow the rules. You can't just buy or sell these stocks at a whim. Market participants geared up for a week full of economic data that will contribute to shaping the outlook of the Federal Reserve. That's why you got to be careful of the bond market. Really careful. Plus, you still have earnings, and you got a lot of retail earnings. And retail, let me show you retail. Let me show you how retail's looking right now, so you could see why I'm not so optimistic here. See, it's bouncing off, but this is way. See, when you bounce off of these levels, that's one thing. When you bounce off of those levels, that's another thing. But bouncing off of those levels, it's like way too steep and too deep. So I'm not so sure how far we're going to go. Maybe up to here and then come right back down. That's making me very, very nervous. All right. So meanwhile, investors are focused right now on the upcoming reports, personal consumption expenditure index, their measure of inflation, which comes out on Thursday. Before that, we have the GDP report. We have the non-farm payroll on Friday. This number's coming up, but very slowly. Before, it was about 12% about a month ago, or maybe 3 weeks ago. Now there's a 21% chance that the Fed is going to raise rates in September. I think that's not going to happen. But there is a 50% chance, give or take, that they're going to raise rates in November, and I believe they will. Consumer confidence is on the table today. Job openings is on the table today. Both important reports that are coming out after the market opens. Europe is up as stimulus measures from China boosted appetite while investors waited a lot of economic data from USA. Europe and Japan have really been keying off of US lately, I'll tell you that. China closed higher, extended gains following Beijing's introduction of a package of measures aimed at bolstering investor confidence. God bless them. They're doing everything possible to come out on the right side of this. Japan closed slightly higher today as investors adopted a cautious stance in anticipation of a series of U.S. economic readings scheduled for this week. That's coming out. Oracle got upgraded. That's really good for Cisco. Cisco and Oracle, they tend to trade together. And network-related technology stocks. That's a good sign. Also, transports and communication may be doing well today because AT&T, and there's a couple of transport stocks that are doing as well today. Keep an eye on retail because of Best Buys, because of, what was that other company? There's other stocks coming out. Best Buys, Big Lots, Smuckers, Hewlett-Packard. You do have some big players reporting today. Now, sectors. Energy, healthcare, industrial, Dow Jones. Notice, Dow Jones is industrial, healthcare, and health and industrial, energy, and healthcare are stronger than the Dow. Then you have the S&P because you got a bunch of technology stocks, and you got consumer discretionary, which is all the way down here, technology, which is down here. Consumer staples is still not doing good, but it's coming up. But notice, mid caps, small caps. I'm going to give you guys a good clue. Whenever you see the mid caps and the Russell below the Dow or the S&P, that means speculative stocks are below the major indices. Typically, when speculative stocks are below the major indices, you don't have a strong market. You don't have a bullish, even a bullish run. Doesn't mean a bullish market. You're not in a bullish run. You're not in an upswing. You might have noticed when the market was doing this right here, when we were coming up, these Russell and mid caps, they were all the way up here, along with technology and so forth. But you could tell that the S&P is being pulled down by technology, by QQQ. 20% of the S&P is the QQQ, by mid caps, small caps, home builders, and retail. This really tells us a great story of where we stand right now. This cumulative 6, 3, and 1 week: energy, healthcare, industrial, Dow Jones. And when you have the Dow and you have industrial, healthcare, and energy, that's a good sign that these are actually outperforming other blue chips like utilities, financial, real estate, consumer staples, and basic materials. Although basic materials should come up, they're very close to industrial. But right now, you want to stick with these four, or these three, actually. That's where the money is, and you want to sell retail, consumer discretionary, which is sort of retail, and home builders. Home builders, consumer discretionary, and real estate have not been doing well over the last month or so. Now, let's talk about the best stocks in light of all of this, right? Because I got to give you some stocks for today. First, I'll give you the relative strength plays, the real conservative plays that I usually give you guys. So, without looking very, very far, Lilly, ETN. Now, how many times have I told you when Lilly was here, what did I tell you? Lilly, ETN, great stocks. Stay away from Adobe. Stay away from NVIDIA right now. Stay away from them. They're too speculative right now. They're just too speculative. West Pharmaceuticals, Adobe, ETN. You see where I'm going here? Quanta, baby. Quanta, I love this stock. I really love this stock. Yeah, you don't have to wonder what I'm thinking. Marathon Petroleum, one of the strongest energy stocks right now. So EQT, Marathon Petroleum, Power, Lilly, ETN to the upside. To the downside, oh boy, where do I start? Etsy, what a crappy stock. Right here, Estee Lauder, sell this stock. Sell this stock. IFF, International Flavor and Fragrance, sell this stock. Trust me, sell this stock. Well, you don't have to trust me, but sell this stock. DXC, sell this stock. So IFF, DXC, and EL, sell those stocks. Now, some small caps for day trading for you guys. I know you guys love those. So TFIC, let me just go to extended range. So the stock is up 100%. 100%. Look at this trend. Do you see this trend? Do you think the stock is going to go and change the world? Come on. So here, now you got to pay attention. If you don't pay attention, it's worthless. You want to sell this stock below 365. Now, if prior to 9:30, right now it's only 8:04. If prior to 9:30 it trades lower than this price, that's the price you want to use. I'm only using this price now because I don't know where the market's going to be in an hour and 25 minutes. But right now the low is 366. So you want to sell it below the pre-market low. You do not want to trade the stock higher. Sell it below the pre-market low and wait for it to come all the way down. It may take a few days. Next stock, OKYO. The stock is up it was up yesterday 28%. It's up now 13%. Now, if you look at this stock, it's already, here, let me go on a 3-month chart. The stock peaked out. It has a nice Gilligan's Island lizard reversal yesterday to the downside. We only want to trade this stock to the downside. You see how these peaks, what happens every time it does this? It comes right back down. So we want to sell this stock. I'm going to show you where we want to sell this stock. We want to sell this stock at below $2.79. $2.79. Now, if it breaks this low before the open, that's what you want to use. But right now, it's $2.80, $2.79. But again, Watch this pre-open. You got to put the extended hours and watch this pre-open. It looks like it's topping out pre-open. And again, right here, 279. You want to sell it at 279. One more, NCNC. This stock is up 9%. 9%. Well, I don't even know what the hell's going on with this stock. I think it just started trading. Forget about this puppy. Forget about this stock. I think it's been trading just for a few days. Forget about it. Scratch it. Before I let you go, again, like our channel, subscribe to our channel, like our videos, post comments below those videos, and remember something. Today's a big day, big day. I'm not only to toot my own horn, but thanks to something I call modified options, my hottest strategy has an 89% win rate dating back to June 8th, and this hasn't been a bullish market. The average return, including winners and losers, is astonishing 63%. Would you like to trade a system that has an 89% win rate with an average gain of 63% this summer? You probably would. I can't make promises about its future returns. That would be irresponsible, but you will be able to see the backtested results of a particular trade before you enter it. I'm very excited about this. I'm going live today at 1 p.m. Eastern Time to reveal this game-changing strategy in what I like to call modified options. The new way to trade options has shown to significantly boost the profit potential while also helping to reduce risk. Click the link below. Save your seat for today's event. Once you do, you'll be eligible to claim a special $1,400 surprise that I've lined up for 30 lucky traders. Don't miss out. Link above or below this video, and make sure you join me in my VIP room at noon today. Link is above or below this video. Don't feel weird about reaching out to me. Roger at rogerscott.com. Bye.